Welcome to The Lumber Word, where industry veterans Matt Beamer, Greg Riley, and Ashley Buckhold dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's episode of The Lumber Word, episode number 96. We got a special guest this week, Sig Thoma. I'll introduce Sig. Matt is on the call also. It's Matt and I today. Greg is somewhere between probably Morocco and here right now, Matt.
Oh, yeah.
So Sig is a 40-year industry veteran, director at Doman Building Materials since 2004. Is that right, Sig?
Yeah, that's correct.
Member of the Hedge Fund Advisory Board, former fund manager in New York and a CTA, co-founder of Progressive Services, owner of Pac Northwest Products, which Sig, I believe, is makes those beautiful cedar shingles we see all over the place. Is that correct?
Yes.
Sole owner of XMI Trading and sole owner of Mill District 1 Real Estate Development. So, Sig, you've kind of had a little bit of, you cut your teeth all through the woods to the final product going into the house. Hell, you even build them and sell them sometimes.
Yeah, we try.
Well, good. I think what we were going to do today, since you have a lot of insight from the mill side, from the fund side, let's try to roll our sleeves up and talk about a few things that people in this industry like to listen to outside of what's going on in the 2x4 price, if that makes sense. I think yesterday when we talked about different things that our listeners want to talk about, Sig, you had some good ideas. So let's dig right into some of the data with affordability.
Yeah, we have the affordability index in housing. It's very common. It's put out by the National Real Estate, NAR, I believe it's a short version. And, they use a formula between median price existing single family home. They use the mortgage rates. They use, obviously, different federal housing finance board on a monthly basis. And so they combine all those factors and then bring out an index. And the index is at a 10-year record low, which means that the affordability is very low for the average consumer. So based on that is one of the challenges why we don't have more home sales is obviously the interest rates and all those items I mentioned earlier that the index projects. And with that projection comes out the index, and the index is at record low. That's challenge number one. Challenge number two is obviously what we're seeing out there. Ironically, I've always wondered when our industry gets more consolidated, and it's happening in the background without anybody realizing it. 88% of every home sold in any major metropolitan area is built by publicly traded home builders. Before I forget is, the builder is running at 28.8 and down to as low as 22% margin. The builder's kind of a little bit in charge of this lack of affordability. Microsoft doesn't make 28%, but the U.S. publicly home builder does.
And that's why they have so much leeway to throw out a mortgage under 5%, et cetera, right? And eat some of that, compress some of that margin to move homes, right? Because if we looked historically over, I don't know, let's just pick it up 20 years, what's the historical margin on home builders? It's certainly not 20%.
No, it's usually below 20. It's around 18, 16, 19 in that era. And also for the first time in our history that I've been around for 45 years, we'll call it, we had home prices stay the same while interest rates increased 4 and 5%.
Yeah.
Usually in the old days, you'd have to drop the price of the house in order for the individual to come in and buy that house at a higher interest rate.
No, it's crazy. A lot of these big builders, they're really they put a house on them because they sell land, right? And in order to sell land, they got to put a piece of property on a house on it, right? how are some of these big builders locking up land prices now? Isn't that's their biggest input cost, right? Obviously.
Yes, so you own 5 acres and you're just on the urban growth boundary, or you're in the city limits, whatever it may be, or just outside the city limits. They come to you and say, look, your property is worth $5 million. We'll give you $100,000 down, and we will take your property in the next 3 to 5 years, and we will pay for your property tax and any other maintenance that might come up for your house, whether a water pipe breaks or your septic system's not working anymore. So they'll take care of the entire property while you still live on it. And then when they are ready to develop it, they'll give you the full price that you originally agreed to. That's a very common, it's basically an option, right?
Yeah, yeah. And I guess this is creating a whole new industry of companies that maintain houses for people, right? Like for large landlords.
Yeah, that could be. I'm not aware of that, but I'm sure that that's out there. It's mainly for people that have acreage.
Yeah,
It's not so much for individual houses.
interesting. Next topic, we want to talk about home sales, new and existing. What kind of trend are you seeing there?
Yeah, I mean, the biggest hurdle that I see, every government talks about affordability. So, give you a couple examples. Major metropolitan area like Portland, a housing permit is $58,000. Okay, that's for an apartment or for a house. It doesn't really matter. So, if you go to the rural areas, and people have to wait up to a year to find out if they can build or not, because that's how long the county will take to give you a
That
permit.
that actually is true. That happened to me when I built my addition in 2015. So that was 9 years
Yeah.
ago. And actually, I think I was right at the beginning of that new process, because the old rule was you just had to get all your neighbors within 100 yards to approve or sign off on your change. And then they passed a new statute in the spring of the following year that said, oh no, there's going to be another like review process on top of that one. So it had to do with your neighborhood and further out neighbors. So you had to get even more approvals. We pulled permits we did it. Our cost of permits and dealing with government bureaucracy was 10% of the budget of a remodel. An addition actually is what it was. It was in the tens of thousands of dollars, dude. It wasn't like a couple $1,000s or a few $100s. It was like
Yeah.
20 some $1,000s, right? It was real money. It wasn't, insignificant.
Sig, it's funny. You said something to me about that a month or so ago, and it literally, I got something. Somebody called me. So there's a new startup company called Greenlight Technologies, and they just got their Series A funding. I think $20 million. They're out of New York, and what they're doing is they want to consolidate all the state, local, federal building codes digitally. I'm going to sound using AI. So when Matt or you, Sig, go in to get a permit, you basically put your blueprint into their database, and it automatically tells the municipality, yes, we hit every one of your exact codes based on what. And that seems to be one of the trends. I don't know how successful that's going to be short term, but I think that's what we need, something like that, the technology to usurp all the individual people that push paper around on this permitting process.
Yeah, that would be great, because, today I filed for a land use to split up 25 acres into 3 parcels on January 19th, and I still don't have the okay. And that's
Yeah,
everything they've asked for. I mean, everything. Spent a lot of money. I'm not going to get into that, but I'm just saying a lot of money.
sure.
And they have till December 16th to let me know. They're satisfied with all the work we did. And so then on December 16th, I can finally file for a building permit, which they have another half year to tell me if I can build or not. Even though I submitted the plans of the house when I filed for the land use. Okay,
Yeah.
so it's not like I'm giving them, blindsiding them, saying, here's the plan, by the way, approve it. No, they've had it since January 19th. So fast forward, you go to a rural town in wherever it is, and you walk in with 2 building plans, and they said, well, we'll give you a permit in 1 hour. Okay, so I sat down, I had a building permit in 1 hour for 2 homes that I
Yeah.
supplied them with plans, blindsided, they've never seen them before. They said, yeah, we agree with those plans for that area, for those lots. And by the way, it's $131.50 for each permit. Okay. And this
Not
is what we've
25,000.
created in these major metropolitan areas. We've created this massive red tape because we pay too many taxes. I'm sorry, I have to go down that rabbit hole. And because we pay too many taxes, the government can build these massive red tape sessions or whatever you want to call them. So this is one of the biggest hurdles I believe is holding affordable housing back is the government is charging too much for you to build and the government delays too much to build. And every builder will tell you that. It's not me, my opinion. Every builder will tell you that.
When I was down in Texas for the LAT, Sig,
Yeah.
couple weeks ago, one of the local banker guys gave a speech for breakfast one morning, and he talked about that exact same subject. Not so much the money side of it, but the time side of it. So he was giving an example of an apartment. Actually, it was like a fourplex that some guy was building down in the Austin area. And at the very end, they made him dig up and redo the entire like water supply system because it wasn't rated for commercial use. And they figured since it was a four house dwelling that it had to be for commercial, not for residential. They basically made the guy spend another $50,000 after he completed the project to go dig up, the water lines and redo them. And that kind of
Yes.
stuff, right, it comes from the municipalities. It doesn't come from anywhere else. It just comes from people that want to use their power and interfere with commerce, really, for no reason.
Unfortunately.
Yeah. Yeah, no doubt about that. So back to the homes, new and existing. I mean, obviously we have the situation here, and this will probably lead into our next conversation, on existing homes of the rate effect right now where people are kind of locked into their existing homes. They don't want to move, right? They don't want to deal with that. And the new homes, barring getting a sub 5% one from new home builders, it's kind of hard to go out and bite off a 6.5 plus mortgage on a home for new home buyers, especially after you talked about affordability. So maybe this is a good one to kind of go into your 10-year, 30-year yield. And let's talk about how are we going to make homes more affordable? I mean, there's two ways to do it. You make the payment more affordable, you lower the price of the home, or you do a little of both, right? What's in your tea leaves on that one?
Homes, I think, will eventually end up a little bit like cars, right? Except the interest rate won't be as low as a car, which you pay too much for the car, but you get a 3% interest rate, right? That's pretty common. So on the home side, we have a 10-year U.S. Treasury that's currently trading, let's use round numbers, at 4%. So we have that at 4%. And during the crisis of the subprime, et cetera, other crisis areas that we've had in the past, there'll be an upcharge for a 30-year mortgage of roughly between 0.5% to 1.5%, we'll say, depending on your lender and your broker and things of that nature. Unfortunately, today, in order to get a 30-year mortgage, pretty well across the board, you have to pay 2.3% above the 4% 10-year US Treasury. So you're at 6.3, 6.4, 6.2, depending on what lender you have and how much of a discount he wants to give you. That variance of the mortgage versus the 10-year yield is also what's recessing or depressing the home sales. So because of the interest rate increases we've had, that particular premium also got increased, as you can see, because it was at one time less than 0.5%. Today it's 2.3 to 2.5% above the 10-year yield. So what I'm saying is there is a chance that we will have a lower mortgage rate soon because now we've rolled over and the Fed reduced the Fed fund rate. And to give you a little perspective of the Fed fund rate, based on our economic status of today, if you rewind 20 years ago at the same status, we were at 2.8% or 2.5 Fed fund rate, and we were at 5.5, and now we're at 5. So we're actually way too high in comparison on economic atmosphere, we'll call it. In other words, it was roughly the same as we are today. The inflation was the same, the retail sales were the same, the home sales were the same. So we're almost double on the Fed fund rate when we're at 5.5. So sooner or later, obviously, the Fed will continue to slowly lower them. I don't expect big moves at all going forward because the economy is too well and they don't want inflation. So bottom line is that we could see lower interest rates on the 30-year mortgage. And I think it's close to being around the corner, and that'll create a lot of competition for those financial institutions that are trying to buy homes in cash. And I think it'll liven up the whole housing market a little better for as far as volume goes.
You feel pretty good about starts. Like last year, we predicted that our year-end predictions. We all took turns at our market predictions for the year, and I said one of my predictions was between 1.3 and 1.4 million housing starts for the year, and I think that's about where we are. Do you expect that to go up or down or sideways next year, Sig, based on the information you were just talking about?
I expect that to go to 1.6 or 1.7. I mean, one of the slowdowns, obviously, is the election right now. Everybody's on the sideline waiting to see who the next guy is on the microphone. So, next person, I should say. So we have to wait that out, right? At the same time, there's something brewing out there that a lot of people don't realize also, I don't think, is, the industry on the manufacturing side is really, really financially damaged. So we saw Canfor, borrowing $265 million on a factoring loan. I don't know if you guys know what factoring means.
Is that like when you go down to your local corner and get a payday loan? Or is that?
It's kind of like that, except for that the guy gets the check from your receivable first, so he makes sure he gets his interest payment.
Is it like, hey, Rocco Moose, help the judge find his wallet type of loan?
Yeah, but so the thing is, they know these mills know they're going to probably get something back.
Right. Yeah. No, I understand that, but I just mean from a financial 50,000-foot level picture, right?
Yeah.
They're really not well. They're cash starving.
It's virtually hard money.
Yeah, Interfor is hard money. Yes, almost.
That's a good way to put it. Like, yeah.
Interfor had to sell, had a bargain sale on their assets to survive. They just run out of money. If you made $1 billion in 21 and 22 and you paid $300 million on taxes or something close to that, you reinvested into 5 or 10 sawmills that you had, whatever, you're after 2 years of losses, you don't have a lot left over. It's just the way it is.
Yeah.
And so it's not some kind of a human error. There was a couple that made some human errors, but there's one right now that's in liquidation as of this morning, and you'll hear about it. I can't say anything, but you'll hear about it sooner or later. It's got 3 U.S. mills and 1 Canadian mill, and that's the bank wants out now. So they're looking for offers for those operations.
So all these mills are having tough times right now, obviously. So let's kind of talk about, like, under the hood, how do mills really operate? So we, as a general public, sometimes think, hey, the price is really low. Why don't you just shut a mill and then open it back up when prices get better, right? That's what everybody thinks. And that's not the case. And that's not the case for a lot of reasons. And, like, what's your insight into that?
Yeah, so the mill operations are, I'd say it's probably a 10 or 12 prong business. First of all, it's the logging contractor that supplies you with the logs. He doesn't want to go park his logging equipment. You have, obviously, your workforce is more important. You don't want to send them down the road. You have supply agreements, you have maintenance agreements, you have a lot of other industries that cater to you as a sawmill that might even go under, or find new customers and leave you for good because you weren't on a consistent running basis. First of all is financials, of course, and the financials are, today every sawmill, I don't care whether it's Eastern spruce or Western spruce or green Doug fir, they're losing $2,500 to $3,000 for every truck that leaves the mill. And then on top of that, you have a real bigger problem, which Matt knows about, which is your byproducts. So you buy 50% of every log, rough number, that goes into the mill is junk. Junk is chips, sawdust, shavings, hog fuel from the bark. So those are all now turning into liabilities. We used to get paid for those. People bought that stuff and made particle board, MDF, pulp, paper, right, etc. And today, all the pulp industry has moved to South America. So that's the challenge you have is the byproducts have not many markets that take the byproducts from the mills.
And that really is different all through when I'm just visualizing all through parts of Canada and through all the different parts. Then it becomes a logistic thing. How do you get rid of it, right? Because you can truck it to ports to try to get rid of it.
Canada still has an advantage because of the cheap Canadian dollar, right?
Okay.
Almost not at record lows, but it's on the basement, right?
Yeah.
So they still have a pulp industry that's still operating. As a matter of fact, Interfor in Port Angeles has a lumber mill there, and they ship all their chips across the water to Vancouver Island to a pulp mill, for instance. So they still have the integration that we don't have anymore in the States. In the West Coast.
We don't really have any pulp mills left in America.
Yeah.
There's a few. Like Longview Fiber, there's one out in Longview.
Right.
That's probably about the only one left, honestly.
Yeah. That's, the business model, generally speaking, if you got out of bed today and you had $100 million, and you said, I'm going to buy some sawmills, you might want to think about it first, right? Because it's a very difficult business model right now to operate in. It has a lot of quirks. And on top of all what we just discussed, here's the logger. Logging companies are closing a lot, especially on the West Coast lately, last 3 years, I would say. And I just had, I speak with sawmill owners, so I really get some seriously, what I call real numbers, right? So the real number for logging now, all the way brought to the sawmill per thousand is over $400. And that guy was only 10 miles away from the mill. In other words, he didn't have a lot of transportation costs. Because the logging companies have to pay a lot more for labor, there's less loggers, they can charge more. So on top of all the stuff we just discussed on the break even or at a loss for most mills, we have that on top of it. And that's a real challenge going forward. You're a blue collar guy and you can work at Amazon at 60 degrees and drive a forklift and have all the benefits in the world. And it's not really a dangerous job, right? Or you can get up at 3:30 in the morning, drive for an hour into the woods, and at 4:30 and rain's coming down and the wind, and it's one of the most dangerous jobs you can have. And then you drive home at 4 o'clock in the afternoon, right? So again, it's not that easy to find loggers. Is the bottom line, especially new ones. So that's another industry challenge going forward, especially in the areas that are close to metro areas where they have lots of opportunities for other jobs.
Yeah, and you can't really furlough loggers either. Once they leave,
No.
how do you get new? You don't see a lot of new young kids wanting to be in the logging business, right?
The labor side of this thing has been something we've talked about it on the show before. But I'll just reiterate. I mean, during the pandemic, when everybody was paying for labor, it was hard for mills to hire, right? Because some people were getting paid to stay home by the government, and some people were working at Amazon or UPS or Walmart or whatever, like Sig was just talking about. And then if you weren't making money in 22 or 23 or 24, how do you shut your mill down and then retain your employees? Because right now your employees are super valuable, right? It's hard to get young people to jump into working at a sawmill or driving a forklift or whatever, cutting trees with a chainsaw. And so mills have been paying for labor whether they were running or not. We can't stop paying for labor, right? I mean, you either shut the mill down permanently, which we've seen permanent closures this year, right?
Yes.
And this is why. This is
Yeah.
a lot of it stems from hostility from the government policies, but the other part of it is economic reality is just hitting people in the face.
And to go back to the logger in Washington State that I am familiar with because I deal with the state, and the labor and industry insurance for a logger per hour is $56. So you're looking at $100 an hour to have anybody with a chainsaw running around in the woods or operating an equipment. You're not going to
Back
get
when I
away
was
much
baling
with
hay, I was getting paid $3.50 an hour. I think I should go back and maybe sue
Well,
somebody.
no, it's funny. I think about what I think about what a plumber or electrician charges me to come over to my house for an hour, and that's a bargain for a.
They charge you $200 just to show up and take a look at your problem, don't they? Isn't that
Pretty
what the going
much.
rate is now?
Pretty much, yeah.
Pretty much. So
Yeah.
when we look at the log costs, and again, we won't get too much into the log costs, but they do obviously go down in certain parts of Pacific Northwest and in Western Canada based on a sliding average, right, of prices of lumber. But it's a very, very slow. How do they adjust those logging prices up in?
It does never go
Basically,
back to
it's
the
just
product.
free market, dude. You have a market price for lumber, and then you have a market price for logs, and those two things may or may not correlate at any given time within a year. So sometimes you get high lumber prices and low log costs, and sometimes you get low lumber prices and high log costs. But there's no one-for-one correlation there.
Yeah. Okay, I got you. And then, but BC is a little different, where they do it something based on an average in price.
BC's pretty
It's based
flat.
on the sales
logging.
price. They have a different stumpage rule based
Yeah.
on the agreements that they made after they got sued by the the Americans for dumping.
97% of all timberlands in Canada are owned by the Canadian government. So it kind of tells you that it's, pretty well set, whatever they decide.
When I talk to a lot of traders out there, a lot of people have in their head right now, hey, sometime first quarter, not just I'm talking to a large one, we're going to be up $100 1,000 by sometime Q1. Like, okay, I mean, maybe. I get a little nervous when everybody speaks in certainties about that, especially a large amount of people. Maybe we will, but I'm guessing from what you're saying, Sig, is if we're going to do that, because, and we talked about this yesterday a little bit, this is such a supply-driven market economically, you're probably going to have some more pain, unfortunately, on the mill side. And when I say pain, there's going to be more permanent and temporary shutdowns and curtailments if that number is going to get to $100 1,000 higher. Does that match up with your thoughts at all?
Yeah, I would say it matches. And also, I think you're going to have a supply-driven market because, as you see, for the first time, as Matt said, we have permanent closures, right? For the first time in I don't know how long, honestly. I've been around, and I don't remember one except for Philomath Inner 4. And then recent C&D and DNR or DR or whoever, DR Johnson and whoever else shut down. I know WCI is for sale. It's a stud mill down in Toledo, Oregon. But I just mean, generally speaking, I've never seen this in a long time, but it's going to continue. So if you have 5 mills that lose money, right, and you shut one down, you're still losing money in the other 4 mills. So you're not going to bring the 5th one back when you get back to break even or make a little money, right? So because it's just going to cost a lot of capital to start that back up. So what I'm saying is you're going to see more curtailments. And if housing picks up, which we kind of think it could to a small extent, you could have a nice market. What's the dollar number? No idea.
Same. Yeah.
Yeah, not a clue.
Just a spitball.
I mean, if we go to 1.6, 1.7, which you alluded to, that would be a driver. That would be a big enough driver to accomplish $100 or more rally.
Yeah.
Based on production levels and the lack of euro that's seemingly around, right? I was getting inundated with European offerings 3 months ago, and now I'm not, and I don't think that anyone else is either. So, the landscape's changed a little bit.
You know what's crazy about that, Matt? I felt that European was down, especially, but we had that big move last year where everybody moved wood over. Remember, we had all that wood down in the Cape and all that.
Yeah.
And according to some of the statistics I'm seeing year to date, because it's accommodating for that big move last year,
Yeah.
we're only down 12% on Euro shipments.
Right. But it was all front loaded in the first half
It
of the
had
year.
to be, right? So, so I agree with you on that feeling. The other thing too, and like Sig mentioned this the other day, we're talking is maybe there's more people getting Euro contracts where it's coming in and we're not seeing it. And it's just sliding off to people. I don't know. I feel like I'm not seeing as much either. But when I saw that 12% number, certainly was a little different. Then I saw the chart of when that big move with all that lumber coming over with. So it makes a little bit sense. But I think if you look at it, we're probably getting around 2 to 3 million board feet. How much? 20 million board feet. What do we think, Sig, a month coming over here?
Well, you got 2.5 billion a year, right?
Yeah.
So yeah, you're 200 million a month.
But there you go. Which
we should get Thomas on here to answer more questions.
Which sounds like a lot, but it doesn't sound like a lot, right? So any little bit less is a lot less. That's interesting. So futures market, risk management.
Yeah, go back to a little bit more on the for next year.
Yeah.
Most analysts are predicting, and I'm not gonna bet the farm on it, but they're predicting that we need 62.3 billion board feet next year in 2025 for the whole year, right? Canada makes 21 billion, and then we make the rest in the South and the West and wherever else, right?
Yeah.
And we're only running at 80% capacity utilization. That means we would have roughly 15% of capacity left to increase if we could and if we would and if we want to, right? So those are kind of your variables. But the fact, the 62.3 billion, which is followed in 26 by 64 billion demand, that's the highest in 12 years. So if and when that happens, like Matt says, and a lot of people out there think, it's $100 bill. I don't know what it's going to be. However, if we go to 1.6, it'll be the largest increase in 12 years. And we do not have the production, to flip the 12% extra.
No, matter of fact, we could be actually increasing demand while supply is continuing to move lower.
Yes.
And that's what we will be doing. I mean, I could make the argument we're probably somewhere in equilibrium right now. I mean, maybe
feels that way.
It certainly feels that way to me. So
this is one of the slowest takeaway times of the year, really.
Yeah.
I mean, seasonally, if you just look at long-term charts. So if we're at equilibrium at a yearly low of demand, right, this time of year, theoretically, what happens in March, April, May, when you hit peak demand?
Well, okay, so we were talking about investors buying mills, right? And how just crazy and tough of investment that is, especially what we just went through over the last year. Is there light at the end of the tunnel if you're investing? I mean, right now, if you can buy places that are actually losing money every day, can you ride it out? Is it a good investment at this point? Depending on where it's at?
Well, distressed is always a good price, right?
Right.
You have to figure out how to make money with it. So
$10 million for a sawmill. Yeah, it's pretty cheap.
You're gonna have to donate for a while. There's no doubt.
Yeah. And I guess it depends upon, that's kind of a broad statement when I said where you're buying it at and what is it in the US? Is it what part of Canada is it in? Where exactly.
Would you rather own a yellow pine mill or a spruce mill going forward?
Yellow pine.
Ashley, Sig, what are your thoughts?
Yellow pine.
Yellow pine. And I don't even trade that much yellow pine, but just from what I see, the cost of logs, the availability, I mean, you don't have to put that big outlay out to build a big log deck every year. It's a little bit more negotiation.
Yeah, on that subject, the other thing that's happening in the West is, so the log was 800, right? And the logger was 400, just round numbers.
Yeah.
So the landowner got $400 a thousand for that tree that they took off, right? Well, today the log price is $650 and the logger is still $400. So now the landowner only gets $250 per thousand. And the landowner is mad because he's getting nothing virtually for his natural resource.
Mm-hmm.
So the landowners are going to start clamming up and not letting them log it. They say I make 5% a year when it grows. It grows roughly 4 to 5%, at least in the West. In yellow pine, it's faster than that. It's probably 8 or 9.
Yeah.
But the long story short is the landowner is going to say, I'll just let it sit and let it grow at 5%. I'm not going to log when I only get 250.
That's actually a good point. I never think about that with landowners, especially in the South. Every year they sit there, their crop literally grows yield, right?
Yes.
And
yes.
that yield basically is an annuity going forward,
Yep.
especially in a commodity that they think will have a better takeaway 2 or 3 years from now. Why would you sell the property, right? Why would you log it?
Yeah, and taxation is 3%. Think about that. So if you log $1 million, you pay $30,000 tax.
Yeah.
It's a heck of a business.
Wow.
I need to go. I got to go, guys. I'm going to go buy some land.
So one thing I kind of wanted to talk about too, since we're all involved in it, is on the risk management side, futures market. I mean, Sig, you were a former fund manager on a hedge fund advisory board. I was at a couple companies that were pretty sophisticated in trading. I see the availability of tools out there for people to use, but yet we still use the old-fashioned way of doing things. What do you see in the future for risk management, and what's it lacking right now? What can people do to improve that, Sig?
I got a little lead-in story. In 1994, there was this gentleman named Zach Patterson said, will you help me create an OSB contract? And I said, sure, I'd love to. I worked at Louisiana Pacific, the largest OSB producer in the world, right?
Mm-hmm.
So what a great thing to have an OSB contract. And we created this contract. It ended up being an index because the OSB market was kind of like a truck market, right? It's scattered all over. It wasn't so much a car market back then. There was so many OSB mills. And long story short, we ended up rolling this index out, and we invited Home Depot, and we said, okay, OSB is at $110. How many contracts would you like to buy, and how far out to supply all your stores? And you can sell them for $7.50 a sheet, which you've never been able to do before, for the next 9 months. Well, we'd have to set up a department, and we just can't do that. Second, the market goes to 300, not because Home Depot didn't buy. I'm just using that example. In 95, 96, I can't remember. The OSB contract is now at 300. I say to my CEO, how many contracts do you want to sell, since our break even in Dawson, BC is $85, and we're trading at 300.
Yeah.
He goes, well, we don't have a department. You'd have to talk to the CFO how we structure that. Bottom line is the OSB contract died because the industry would not recognize the tool, or didn't want to start a department, right?
Right.
Well, it's the same thing with lumber futures. It doesn't matter really which one it is. They're doing the same thing today. They have to change. If they want to make money, if they want to have reasonable margins, Hampton is a big exception. Obviously, they have a trading floor. They are hedged. But other companies, when you get to $1,500 and your break even is 400, you should probably look at that really hard and have an account.
Yeah.
That's what I'm talking about. It's really, what are we a year? 100 billion, 200 billion industry? I've never looked at it, how many dollars it is, right? The whole industry.
Yeah.
So
we're $100 billion a year industry, based on the idea that somebody's going to go pay a bunch of money to buy the raw material in October, and then the finished product won't be done until February, and they won't get paid for it until March. So we're already taking risk, right? As manufacturers, we have a 4 to 6 month risk. We don't know what we know what the cost of lumber is today. We don't know what we're going to sell it for in February, other than what the futures board tells us. That's a guideline, right? That's not. But since most mills won't sell the board because they see it as risky behavior or speculation, they can just talk about it all day long, but they don't actually do anything about the fact that they're really in a risky business already, just by buying logs and then waiting to turn them into lumber and get paid for them down the road. That's the risk. I mean, Sig was talking about what it costs to buy and start a sawmill. and run a sawmill. And then the costs
Yeah.
are extraordinary. That's why people are shutting down left and right, because it is so expensive and difficult to run sawmills profitably these days for a variety of reasons. And yet the one tool that's staring people in the face that they think is like speculation is the one that they always talk bad about and they ignore. And it gives them a chance to just emulate what some of their customers are doing. You think that the job shippers like Ashley, you and Greg take risk? You gonna go out and sell an apartment job for March at today's price?
No.
Nope.
No.
Nope.
I also find
But you
it
can lock that
interesting.
price in without any risk to you or the builder, right? Or the developer by using the
Yeah.
board. And mills can also do the same thing on the opposite end. They can guarantee themselves a price for future shipment. And so I look at the March contract, it's at 560 something. The May contract's at 58. I don't have to guess what the price of lumber is going to be in March or May. It just tells me right there. If I want to sell it, I just pick up the column. Okay, sold. And that's not speculation. That's absolutely not
insurance.
speculation. That's
It's
not even
insurance.
risky.
It's
Yeah.
Yeah.
insurance.
No.
And look, there's probably at some point in the next 2 years going to be a Southern Yellow Pine contract come out, which I think it's going to be great. Right now, we'll just have to see if some of the same people that aren't using the spruce contract that own Southern Pine Mills are going to actually use the contract. Right. I think what comes down to is like, nobody wants to put their hand up in the air and say, I will be the person that runs this department. And here's what the standards are going to be. And here's what we're going to do. There's going to be drawdowns. But here our goal is to use it as part of our marketing and to increase profit, increase liquidity, and to manage our risk. Right.
Yep.
Yeah, that's the challenge. I've never been able to overcome it being inside the largest OSB producer and was asked to help the index. I mean, I didn't get out of bed and answer the phone with Zach Patterson and say, hey, let's do the OSB contact. No, I asked the CEO, do you want this? Oh, yeah. Oh, that'd be great. Oh, yeah. But guess what happened, right? Nothing.
Yeah.
That's what I'm talking about. When they make $300 to OSB and they have a break even of $85, they don't even want to hear about the futures contract, right? But when they're selling it for 65 and their cost is 85, and they go, oh, well, how's the futures market looking? Well, just as bad as your cash market.
Yeah, well, there was I think somebody had a survey one time about how many people trade CME lumber and how many people talk about CME lumber. So when I'm on the phone, phone, sometimes I'll be like, "Hey, I can give you this for it." They're like, "Yeah, but the futures price is this." I'm like, "Well, you don't even trade the futures, so why do you only talk about it when it's as a negotiating point, right?"
I travel quite a bit, and both mills and end users and reloads and all over the place. And you know how many times I've seen futures screens in people's offices, like live feeds?
Yeah.
I mean, it's at least 50%, right? But I guarantee you, not 50% of the industry's trading it, right? It's like less than 1%. So there's your answer. At least half the industry talks about it all the time, and less than 1% trades it.
I think it scares certain people, right? And those aren't the people that should be trading it. You need to know why you're using it and have some metal and be able to trade it. And it's not.
Look,
for
Ashley,
everybody.
if you and I could figure out how to do it, no offense, we're not rocket surgeons. If we could figure out how to do it, anyone can figure out how to do it, right?
Well, you take a look at a
just need to understand.
company, right?
Yeah.
A distribution company makes maximum usually 15%, margin, and it costs 12% to run it. So a distribution company makes 3% pre-tax on a pretty standard lumber, plywood type distribution. So if you're making 3% and you have an opportunity to make 20 or 25%, why would you not lock that in if you're a distributor? So what, you leave 5% on the table because it went further than you thought and you had a lot of inventory, but the lock-in is just not existing in these guys' brains. It's amazing.
No, it's like the farmer that says, I want $10 a bushel, but I'll take 3.
Right. But the farmer is even more dangerous because if the farmer is hedged, right, on wheat or corn, and his crop goes bad, he's upside down and he can't deliver.
That's right.
The lumber guys can deliver. They're never upside down. Their crop doesn't go bad.
Yeah.
So you got people
Yeah.
that are farmers that are smarter than the entire lumber industry.
Well, I mean, most big farmers nowadays are all involved
Oh,
in risk
yeah.
management because they
You know
have
what
to.
I'm
They
saying.
have to be. Yeah, no doubt, no
Yeah.
doubt about that.
Yeah,
No doubt about that.
it's crazy. There's no
Um,
limit for it.
So what do you see just near term here, Sig, going forward? We're in kind of a strange area where everybody's kind of hoping prices go higher. Takeaway is okay. And as Matt said, we're in seasonal weakness right now, so to speak. Actually, next week, is it the third week usually of October is, for spruce at least, is usually the seasonal low. I think that's right. I'm guessing it still is. But we've been pretty steady still on trucks. What do you guys all think we're gonna do going into November here?
The one thing I want to point out on that subject, and I've told Matt this already, is please be aware that the 88% of publicly traded home builders that build in all the metropolitan areas have a requirement to meet a certain insulation code. So the insulation value has to be, let's say, an R50. In order to get the R50, they have to pump in more insulation into the wall, and therefore they use in 2x6.
Mm.
And that's why you see in the changes in the 2x6 premiums that's never existed this big before, is because these publicly traded home builders have to create a thicker wall to meet the R value that the government is requiring them to accomplish. And what that means is less CO2 because you're going to spend less heat because you got better insulation, right? Just like
Okay.
the electric
Yeah.
car, et cetera.
So the challenge there is R value is an interesting equation because you could probably meet that R value with a 2x4 if you used a heavier type of insulation too, right?
Or a better insulation.
Or a better
Or-
insulation,
yeah,
right?
right.
So
Yeah.
so the whole equation comes down to you're going to either use a 2x6 and just blow it in, or do something easier, or use a 2x4 and figure out what the R value is.
And pay a little
Yeah.
more for your
Yeah.
insulation. Yeah.
But it makes sense. And if 2x6 keeps going crazy, that's a great point, Sig. And when did that kick in, and when did they start doing that?
It started, I think, in the beginning of the year.
Okay.
Is when the law came out, or the requirement from the government, basically.
You think that came out of one of the bills that Congress passed to do with the green
Yeah.
energy, what do they
Right.
call that? The Inflation Reduction Act probably came out of that.
Yeah. Right.
That's interesting. And then pair that up with some of the main mills that are curtailed or shutting, are one of your biggest producers of 2x6.
Yeah.
Right.
I mean, 2x4 green Doug for studs are less than $300 FOB mill.
Yeah.
Right, Matt?
Not anymore.
Oh, okay.
No, I
not-
mean green hurt itself this week, so it for sure green was quieter, 2 weeks ago, and it started getting better last week, and then this week there's been some follow through. So I think that we feel better about it. It's still not profitable. The numbers are bad, but better, for sure better. And then the dry hem fir and the dry Doug fir is just clicking along, dude. I mean, there's nothing real exciting about it, but it's certainly not going down. We've been able to bump prices slightly on the narrows here this week. And so things are going pretty good for this time of year. It's almost like the industry all expected lumber prices to be at their yearly lows right about now. And so everybody ran their inventories down, expecting that they'll be able to come in and buy. And now everybody wants to buy at the same time. And, with all the curtailments, the market's just sort of just staying flat because of that, right? It's like the industry's actually gotten a little smarter. And so because of the curtailments and the low inventory situations out there and a relatively mild fall weather that we're having here, I think things are just going to continue to click along for the foreseeable future. It doesn't look like there's any real big speed bumps in front of us, other than maybe if there's a big sell off in the board, there might be because it's carrying quite a premium. And it wouldn't surprise me to come in on a Tuesday and see it down 20 or something like that, just to sort of test the people's resolve. I think it would get bought up again, but you do have a target down there at like 495 to 505 in November, and there's still 6,000 open interest. So, we have less than 30 days to close that contract out, and you got 6,000 pieces of paper that need to get resolved. That's a little higher than normal.
as we were talking today, you were able to roll Nova to Jan at $30 plus.
A lot of people are going to do that for sure. Absolutely. There's going to be a lot of rolling. If they're paying you $30 to roll, you should take it. Right.
Well, that makes
now,
it's
on the flip side, if you think that your inventory is going to be worth $100 more, then you just get out and take your $30 loss. Right?
Cost to carry is only $4 or $5 a thousand, isn't it, Ashley?
Yeah, I'm just thinking cost to carry. It's a little bit more now, I think, with cost
it's more
of
now because of the storage costs, right? The reloads have gotten more expensive.
Yeah. And I mean,
then on top of that, your trucking costs have gone up too, right? So it's just, it's more like 15 or, 10 to 15 a month, I think is probably more realistic.
Okay. Yeah.
Well, Sig, it was great catching up. I'm going to have to do some more research on that 2x6 thing too. That makes the most freaking sense of anybody that's told me anything on why 2x6 is so high. That'll be a good nugget for everybody. Looking forward to continuing the conversation. So thank you.
No, thanks for having me. I appreciate it. And good luck and good trading, you guys.
All right, guys. Thank you very much. Have a great day.
Take care, you guys.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.